Right, on Talking Point and Earnings Edge with Dr. Satyanarayana Chava, founder and CEO of Laurus Labs, with us on the show. Dr. Chava, thanks so much for joining in. Two ways to dissect these numbers. I want to talk about Q4 first, and optically relative to what Bloomberg estimates were, the numbers were below. You had spoken about, though, that the possibility of making a dash towards that 20% mark in Q4. It seems that you've started off on that note because you've come in at margins higher than what you've done in the previous 3 quarters. Put the quarter into perspective for us, please.
Niraj, good morning. As we envisaged, we were able to do very well with respect to revenues. And we also improved our EBITDA margins to closer to 18%. That's the trajectory we anticipate because we are not doing any new initiatives, we are not investing any new capacities right now, except continuing to invest in the crop science, building additional capacity in animal health. We believe any increase in sales from here onwards will certainly help us to improve our EBITDA margins.
Got it. Dr. Chava, we saw the press release post the earnings, we heard the con call as well. There is some stuff that you guided to, and I'll come to that in a moment. But first, the key point, I mean, everybody's talking about the CDMO opportunity, especially after the Biosecure Act. We had a guest just before you who looks at that space closely, talking about that too. 4% growth in Q4 on a YOY basis in the CDMO business. There is growth. Did it live up to the expectations, or is a larger portion of that CDMO uptick that is being envisaged will come as the quarters roll by?
Niraj, as you're fully aware, CDMO business has much longer gestation period than the generics. And you have to travel along with the clinical progress of the molecule. Only the opportunity will be big if innovator chooses to add another source for a already launched molecule. That we haven't seen. What we have seen, many projects at the later phases, that means phase 2, phase 3, we are doing validations right now. A lot of our resources are consumed in delivering those kind of projects to our partners. Why we are very bullish on CDMO space is because how much of resources we are putting on those projects is an indicator internally for us to gauge how the future look like. See, today, if we don't have any interesting project or projects, we are also have to go through a lot of introspection. But right now, we are focusing on recruiting more talent, advancing programs, and delivering programs as we committed. That means all the team members are busy in delivering what we have promised to our customers. And we have to wait for them to go to commercial. Some of them are nearing NDA filing, some already filed. And in the animal health space, we already got an order for an NCE, which we will deliver in FY25. And another 2 molecules, our partner is filing NDA during this year, and 1 will go commercial next year. So things are getting closer to our anticipation. That is the reason we are very hopeful on our investments made, both our strategy, both our R&D resources, capacity allocation, will certainly yield revenues and will certainly yield the numbers what we are anticipating.
Dr. Chava, this animal health order, I'll just probe this a little bit. The animal health order, I believe on the call you said it is likely in November. Is this safely predictable? Because, I mean, or are the timelines still fluid, that instead of November, it could well be October, it could well be March as well for the next year?
We are already started manufacturing, so there is no ambiguity here. We have order on hand and we started manufacturing. So there is no ambiguity here.
Okay, so the timelines are November, that is one. And you spoke about 2 or 3 or 4 things. I'm just trying to understand, are these, is this a bit of string of pearls that you're stitching, or are each of these large enough to make a meaningful differential for the CDMO business for Laurus as they materialize and show in the numbers?
In the animal health space, we know what products we are making, what quantities and what price we are selling. So as we anticipated, we will achieve peak revenues in animal health in FY27. FY25 will be good ramp up in the products validations and then supplies. 27 will see more pickup in validations. And 27 will be the year where we estimate we will reach the peak potential of our investment in the animal health. In the crop sciences space, currently we have one contract, we know how much we are going to sell. So these two have no ambiguity and we know what we are doing. And another, our steroid and intermediate supplies to Aspen is also a contract in place, we know how much. So we are solidifying our business coming into contractual commercial supplies. The only one which is having big potential and lot of resources we put in is the human health CDMO. That's where we see company will have a lot of opportunities, and we also know how many projects we are working in the human health space. That's the where we feel meaningful numbers will come in the near future, nearest.
But I would presume, Dr. Chava, that on this, giving any kind of timelines is difficult, isn't it? Or is it kind of predictable, if you will? Human health.
The human health, the quantum of opportunity is very big.
Sure.
And at the same time, it is not predictable. There could be stumbling blocks where the program could be delayed, FDA could ask more questions. So we have no control on that. Our animal health, crop sciences, steroidal intermediates, we have absolute clarity because there are no surprises here, positive or negative. Whereas in the case of human health, we have many projects. It's not that our future plans are scattered by one program. We have multiple programs. If all programs succeed, move to the next phase, we will see significant uptake. But we are having a basket of products, so I don't see a challenge for us in that space. But the quantum of business opportunity in the human health space is enormous.
Got it. Now, I believe, again, on the call you said that the ability to go back to the 20% margin, I'm bringing in a margin question here because we're talking about CDMO, and I believe you said that the ability to go back to 20% from the current, let's say, quarter 4, 16.5, 17 odd percent to maybe 20% would hinge on how well CDMO does. You have some sense about November for the animal health order, but some of the others might be moving as well. Do you reckon as an average 20% for FY25 is a possibility, or is it difficult to say?
We certainly see it's a possibility if you see the overall year. So, you know, unlike the generic business, the CDMO business doesn't go by quarter. You deliver the order in a particular month. So, for the overall year, we definitely feel we will be meeting or exceeding that number, Niraj. Yeah.
But difficult to say. I mean, you moved from 15% for 3 quarters in a row to 17% in quarter 4. Yeah, 16.5, 17 if I'm not wrong. But do you reckon that this uptick could continue into quarter 1 as well? Or again, even that is difficult to say. Would you be at 17, 18% in quarter 1? Or is it possible that you may move back to 15, but overall you will do 20?
I think overall we are very confident to do 20 years. I'll put that way. Yeah. We know when we are going to deliver each project. So the comfort to cross that hurdle of 20% EBITDA will be very high for the overall year.
For the overall year. Okay, so it could be lumpy, but overall you could probably see an average of 20 odd % coming in. Okay, fair call. Just one quick broad brush question, Dr. Chava, which we have just 5 minutes, but just trying to understand. Are there significant benefits that could come in from the Biosecure Act in the US? Because a lot of people are saying that India could be a big potential beneficiary. Do you see that? And how far dated would it be, or could it be immediate?
Indian companies will certainly benefit from this Biosecure Act, but I don't expect it is going to be in the next quarter, maybe in the next financial year, because the technology transfers, validations, approval within their dossiers will take its own time. But it is a good step. So Indian companies will certainly benefit from this Biosecure Act.
Got it. API portfolio, Dr. Chava, moving tracks. You said that price headwinds are expected. I'm trying to understand how will it impact numbers? Will it be of such a small headwind that you go ahead and say that volumes will take care of the price headwinds?
See, as we have seen in our API, we started stabilizing our revenue stream from the APIs. The one surprise for us was the significant growth we have seen in our oncology APIs. We continue to see good opportunities in the oncology space. That will grow. We thought 300 crores is the peak revenues, but now we believe we can even cross 500 crores oncology sales. So that is growing very well with good margins. And in the CMO space in generic APIs is also picking up very well. So the ARBs will continue to have some headwinds as you mentioned, but those headwinds will be able to manage with softening of raw material prices or the efficiency improvements internally.
Okay, so price headwinds, yes, but not so stark that you can now take care of it via efficiencies and volumes. Would that be a fair way to assess it?
Absolutely, Niraj. Yeah.
Got it, sir. Okay, CapEx plans for FY25, 700 crores, pretty similar to what you've done in FY24. Where will the larger CapEx be committed to, Dr. Chava?
As we have mentioned in our investor presentation also in the call, we also just started construction of a fermentation facility at Vizag. Because we saw some opportunities in the GMP fermentation space, we are doing GMP fermentation in Vizag and then food proteins related, food and cosmetic precision fermentation at Mysore. So both will see capex in this FY25. And also we are increasing little bit of capex in our formulations to meet some tertiary packaging requirements from our partner. We are adding little bit of API capacity, but significantly we are adding more into contract manufacturing space.
Got it. Dr. Chava, one final question really, and that is whether you see not FY25, but maybe FY26 or thereabouts as a year of change of sorts. And where I'm coming from is purely numbers, sir. From FY21 to FY24 end, the revenues have stayed circa 4,800 to 5,000, except for FY23 where there was a bit of a step up and then it's come back again. Operating profit FY24 versus FY21 has halved, and I know that those were exceptional years, but they've come off quite materially. When do things not necessarily go back to those levels, but when do things improve? Is that can be expected in FY26, FY25, FY27, or is it difficult to say?
I think we came out of the woods because any new revenue growth for us is going to show significant benefit in our EBITDA margins. And we believe the FY24 was a year of consolidation. FY25 will see growth, and FY26, 27 will see significant growth. I'll put that way, Niraj.
Yeah, I know I understood on the call you shying away from giving an exact guidance, and I will not press you to do that, but just wanted a color about what this could shape up like. Great, Dr. Chava, out of time, but thank you so much for taking the time out and being with us, and all the best for the quarters ahead.
Thank you, Niraj. Thank you for your insightful questions.
Not at all. Thank you for joining in, and viewers, thanks for tuning in to this pharma-focused or healthcare-focused Talking Point show today.